Welcome, traders. Mic check, 1, 2. We are live and streaming. Wonderful. It's once again a pleasure to be here, giving you some of my best insights into the financial markets. You're very welcome. Welcome back to this channel, Tony Trades channel. We've been trying to have these live streams every other week, and today's a very special day. I'm telling you now, it's going to be raw, okay? Today we're not doing anything fancy, just going to be honest, and it's going to be very powerful, okay? This is not one of those streams where, I only show you the winning setups or the highlight reels, just like you've been seeing. But today we are going to be focusing on some of the mistakes, some of the pitfalls that most of you have gone or have experienced, the mistakes, the pain, the discipline, and how we as traders turn losses into lessons. So, because let's be real, guys. You see, trading is not just about charts. And I've been telling you, if you're following my community, you're able to see what I do actually off the charts. It's about your mind, your reactions, your discipline, and today I'll be showing you everything, okay? I'll be showing you everything from getting stuck into trades to the pain of slippage, to mixing fundamentals with short-term swings, and yes, I'll also take some live trades, hopefully, if we get some, with you, so you can feel what it's really like trading with me. Now, before we dive deep, I want to share with you my interesting promo code here. Feel free to use that promo code to get 100% bonus on your first deposit, and that will definitely help you trade. Enhance your trading experience. So if you're around, please write in the comments sector where you are jumping in. We had so many people from all over the world. Please just write in the comment section where you're listening from. And don't forget, we're going to have a Q&A, so this should be an interactive one. If you have any questions regarding some of your mistakes, some of your lessons, it would be really nice to share those. Now, without wasting any time, allow me to start from the basics. Remember that any market out there, it doesn't matter which category or basket you're looking into, crypto, it could be indices, it could be forex, anything. The market has 4 phases, all right? We have a consolidation zone, all right? This is where the market actually consolidates. So I drew out something small for you to hear me out. So we have a consolidation usually happening at the start, right before we have an expansion, all right? And I want to repeat this because many, even advanced traders, often forget this, but it's very important to remind yourself which area you're trading from. So when we have a consolidation in any market, like this first block here, price is moving sideways always, all right? It moves to the side, to the right, and we have highs and lows nearly equal. We have the high and the low. So price slightly breaks out and then comes back and then goes back and then comes back. So buyers and sellers are balanced here, right? So many of us jump mid-range. We never wait for price to break above. This is one area that you need to check. If price doesn't break above, there's no reason to jump in, all right? Now, resistance, we call the lower boundaries resistance, the upper boundaries support and resistance. Now, that's where the real opportunity is. It's never in equilibrium, all right? Equilibrium is that center point in between the price ranges, and I'll draw that for you. Okay, so if we have a price range, for example, right there, you never enter in between there. So patience is key. Now, when we have distribution, price usually gets out of this box and jumps up. Of course, we have retracements, we have highs, lows. This is the kind of range distribution of a trend, usually after a strong uptrend, right? So avoid buying near the top. Many of you jump in right there. You need to avoid jumping in there. You have to wait for healthy pullbacks, and of course, chasing strength here is very dangerous. We have expansion, all right? So when we have an expansion, the trend everyone dreams of, right? Price is moving clearly with momentum. And right after momentum, we have to confirm this momentum. How do you do that? I will show you. We've been talking about this in multiple live streams. So we have pullbacks and correction phase as well. So when the price is distributed, we also have a correction phase where many of you are using Fibonacci's and a lot more. You're using all kinds of tools to sort of interact with the market. Don't forget that this is just one perspective. We have the institutional perspective and the retail perspective. So I'm not going to bore you a lot with that. We have four conditions. The first one is a consolidation, which I've drawn right here. We have a distribution. We have an expansion. Expansion is always to the upside, while we have distribution pretty much distributing to the downside. And we have correction. So on a consolidation, what I advise is wait for the breakout. Never enter in a consolidation. Next, when you're having a distribution, avoid tops, okay? If you have a distribution like this from the top, avoid the tops. You don't want to get out from here. Expansions, right here, you need to wait for the pullback. And of course, when price is correcting down, you need to enter exactly near support and resistances, right? I'm not sure if I've been clear enough, but again, we have a consolidation phase, all right, where price just consolidates. We have a distribution. Phase where price is pretty much at the top and ready to distribute. We have an expansion where price leaves the consolidation zone, and then we have a correction right after the the distribution. So we'll get into more details, but let's look at mistake number one. And mistake number one is getting stuck with trades. I like to call it the swing trap. What does the swing trap mean? Let me start with one of my biggest psychological traps that literally, when I was starting out, it was extremely hard to face. And that was getting stuck in trades. Picture this. You enter a scalp, okay? You need to enter a scalp. Let's say you enter a scalp right here, all right? You assume that price had to go up, and then you entered it, and all of a sudden, the move went down, bearish. Now, price usually hesitates around these areas. Instead of closing it, that's why we need strict rules. Instead of closing it right below the previous support, right at the, say, 1.19, you convince yourself that it's okay, I'll hold overnight. Now, whenever we trade fundamentals on Fridays, you do realize that we have a Saturday and Sunday. So usually you're still in it, and what was a scalp becomes a swing. Then it drifts farther and farther and farther, and it could take days and weeks. I mean, you could see what's going on here. And this really drains you emotionally. I remember this exact thing. One day, one trader tied me up my capital for weeks. So not only did it drain my balance, but slowly, it drained my focus. Now, in trading, you want to always remain in control of your mind. This is the Euro USD. Usually happens on gold, and many other pairs. It doesn't really matter what pair you're trading, but the lesson here is don't let the market redefine your trade, all right? A scalp is not a swing. Let me repeat that one more time. A scalp is not a swing. A day trade is not open for long-term goals, right? So it's not an investment. Don't treat this as an investment. Anything to do with scalping isn't an investment. You need to get in and get out. If your reason for entry is invalidated, like I just showed you right here, just end it. Just call it a day, call it quits, and I don't know, do what you got to do. Switch off your computer and leave. Now, here's another key. In regard to psychology, being stuck is not about the market, all right? The market has nothing to do with this. It was just your assumption and your mindset thinking that the market would go your way. So what I've realized and learned over time, it's more about ego. You don't want to admit it, right? You're wrong. So you marry the trade. So you need not to marry the trade. Remember, marriage in trading usually ends in divorce with your account. What does that mean? You literally will crush your capital. And the earlier you learn to detach, the better. So what is the cure? Define your exit strategy and your entry. If it goes wrong, you cut it. Simple. Anything out of that will result into a painful loss. So this is one mistake that I see a lot of novice traders having hard time. I do get it. You get attached to strategies, to all kinds of gurus out there, communities, but you need to call your loss as soon as you see it. Now here's another lesson that hurt me badly, all right? Another lesson was mixing fundamentals with short-term trades. Many of you jump into trades without actually looking at the economic calendar. You need to understand the seasonal tendency. You need to know where exactly you are from a fundamental perspective. If you have a clear goal for the month, you have a little calendar beside you, you identify what days could bring volatility. This is another important point, because sometimes you get caught off guard and you find yourself trading, and all of a sudden we have a big move to the downside, to the upside, whatever, and you start to scratch your head. So the point is to stay really in control of your mind. It comes down to your psychological power and mental toughness. So yeah, I remember once I longed GBP after the Bank of England hinted at rate hikes. So fundamentally, I was right. 6 months later, the GBP was higher, but in the short term, the market dumped on the 15-minute chart. So my stock got smashed, and I was pretty much fighting the wrong battle. When it comes to fundamentals, move the tide, all right? Fundamentals, you move the tide. Technicals, you move the waves. So when it comes to technicals, you need to catch trends. Fundamentals have no business whatsoever with waves. If you're scalping or day trading, don't just justify your trades with long-term fundamentals. If you're investing long-term, stop stressing over 5-minute candles, all right? So the time frame also matters. Many of you have watched my streams, and I trade even 1-minute time frames, all right? This is very important, because you don't want to mix a 5-minute candle with a daily candle. Remember, the highs are different. We have different highs, different weekly highs, lows, different daily highs, lows. So you need to demarcate these highs and lows for every instrument that you'll be trading. I'm just going through some of these very fast, and if you've been trading for a while, you understand what I'm saying. For those novice traders out there, check out my community. I have a guide, a complete guide teaching you this stuff in detail. Okay, let's take an example like NFP. Many of you have watched me trade NFP. If it spikes 100 pips off any level, right? If it spikes, for example, we entered right here and it spiked. And then it spikes another 200, right? It keeps going high and high. If you mixed your long-term, say, Fed bullish view with a 1-minute scalp, you pretty much get destroyed. You know, those whipsaws keep coming in and out. So the psychology is identity crisis. I've probably heard about that. Traders blow accounts because they don't really know what they are. Are you a scalper? Are you a swing trader? Are you an investor? You must define your identity. If you don't, the market will define it for you. Trust me. But just that it will be very brutal. All right? It's going to be a very brutal experience for you, and you don't want that. Of course, there's so many questions out there in regard to mistakes. But I want to talk about something also not a lot talk about on mainstream, and that is your hidden enemy. You see, we have the front end dynamic and we have the brokerage dynamic, the back end. I like to call it the back end of the financial markets. If I flip the lens for a moment and talk about, you know, something most retail traders never see, I bet you so many novice traders especially, they hear about some, but they don't really know what happens. What exactly happens at the back end of a brokerage end? So behind every trade you place, there's a risk management engine running in the background that many of you are not aware of. Even advanced guys, sometimes you wonder, you ask yourself, but why this happened? Why was it the market? Everything is well engineered. It doesn't just see you as a trader. It's part of a massive floor of orders. You know, there's lots of exposure and potential risk in the house, and all that has to be mitigated. So an example is every brokerage company out there has a tracking, you know, methodology. And these are things you'll never hear online. When you place a buy, all right, the trade is logged, it's acknowledged, and sometimes 2 or 3 times, depending on what bureaucracy is behind there. So the reason they do that is to protect the system. If you're on a B or hybrid or a B book, whatever book you're up to, they're trying to protect themselves against risk. So against slippage, against latency, and other mismatches. So the exposure models that the brokerages use are constantly monitoring open order exposure. This is some stuff you've probably never heard of, but I wanted to break it down for you. From a different lens, you have to know that there are hedging patterns going on. If too many clients are leaning on one side of a swing trade, the alarms go off. So you're literally working against not just the most intelligent systems out there, but you're working against artificial intelligence, you're working against fast algorithms and bots. Now, if you have that in mind, you also need to know the rebate and abuse tracking. We have a lot of arbitrage traders out there. You might feel smart and try to use all kinds of strategies, that, you know, using, say, 5 phones or different IPs and things like that. But we understand that they have these very strong, you know, collectively, I heard the other day somebody saying this is enigma. So many call it the god of the market, or the engine that drives the market, or enigma. They come up with all these kind of terms, but honestly, it's just like any other software. And there are trackers for scalpers, for new traders, for possible rebate abusers, and so forth. Now, why am I telling you all this? I'm giving you a perspective against what you are trading against. And by understanding this, you'll be able to have a full picture on how best to trade. Okay, if you have any questions so far, please could you write in the chat if you have any questions. I see some of you have started DMing me. Yeah, and of course, don't forget we have performance dashboards, all right? Whereby we see profit per account, we have different kinds of lots traded. If we've given you leverage of 1,000, you need to understand that to battle it is going to be tough, and we need to offset some of these positions. So what does this mean for you as a trader or a novice or an advanced trader just coming in? It means when you're stuck in trades, listen me out. When you are stuck in any trade, it means when you're swinging between a long and short, or even mixing fundamentals and long-term holds, you're not invisible. Let me say that one more time. You're not invisible. The system is watching how you behave. Pretty much like God. We all have this ideology that God is looking at us from somewhere. If you're in a room alone, God is looking at you. Something similar. So slippage, records, if you ever see widening spreads during news events, all of that is not random. It's tied to these back-end models that actually make sure that the brokerage manages risk first and then profit comes in second. So a trader satisfaction will be the last. Now, once you understand the back end, and you'll start to understand why discipline, when I talk about sizing, timing, these aren't just about the chart. They're also about navigating how the other side of your trade sees you. Now, let's talk about more about this strategy that I talk, the back end. You see, it's not just a strategy that determines if you win. It's the execution. So whenever you're trading, and especially during fundamental news, fortunately today we don't have anything serious besides the Fed Chair Powell speaks. We had interest rates before. We have President Trump speaking, and that's pretty much it. So I won't push this any further in regard to trading today. If we do get a position, I'll let you know. But looking at all my zones, it's a little bit stagnant. You could probably join my community. I will have some more trades coming up in the New York session. Now, what is slippage? If you click buy, for example, if you buy 400 right now at the current price is 8935, and instead of filling your order here, it fills you, say, 3 pips above. If you do that 100 times on a $1,000 account, you've lost more than some traders lose. Especially once you start to see your capital growing, you want to take very good, careful understanding of the slippage and your brokerage. Currently, this brokerage company, Pocket Options, is one of my favorite, hands down, because I haven't detected anything, weird. There are no inconsistencies, and the licenses and everything is in check. So this is what I want to look at. I want to look at the brokerage company that I'm using, so that I'm not part of this weird games that go on behind. Always account for friction. If you're going into a trade, just like any other business, there's some losses and that you'll incur. So don't only calculate on the revenue, calculate the costs. In trading, the costs are spreads, commissions, swaps, and slippages. When you're trading fundamentals, watch for those gaps. During Form C or NFP, watch how the candles gap. That's not just price, that's execution. So the psychology behind this is you start doubting the system, all right? Maybe a setup doesn't work, when in reality, it's your broker's backend eating you alive. So this is why journaling execution matters. Every trade, you could journal it. Actually, you could ask your brokerage company to send you a monthly statement. I'm sure majority of brokers send monthly statements. You need those monthly statements to analyze the entries, the exits, and over time, you'll be able to see this in between the lines. Yeah, so I'm just running through some of the main mistakes that novice traders are going through. This is one of my favorite. How do you bounce back from a mistake? Supposing you made a mistake, right? You have a strict rule, you only lose 2%, and you end up burning 5%. This is very common at the start of your career. How do you solve this? My recovery checklist. I have a checklist, and feel free to DM me or join my community. I'll send you this checklist free of charge. I call it the recovery checklist. You need to define trade identity, right? Like I've mentioned, understand if you're scalping, if you're swinging, or you're investing. Never switch mid-trade. Before you enter any trade, you have it, all right, I'm scalping today, and that is it. Respect your time frames. If you're a scalper, I don't expect you to be using a daily candle, okay? The daily candle is just to know the bigger picture. You have your zones mapped out, you have your highs, you have your lows, and I already mentioned where you could get the real highs. Always compare your highs with your brokerage firms, right? Many out there have slightly altered their highs and lows, and even 10 pips can put you off. So respect your time frame. Don't use your daily GDP report to justify a 5-minute scalp. Now, account for friction. This is part of my checklist. Expect spreads and slippage swaps. It's part of the business cost. Brokerages are running on costs. They need to pay their employees. They need to do a lot of work in the background. So understand that you are paying for a service, and that is fine. And my favorite is detaching from ego. Cutting a losing trade is strength. It's not weakness. Actually, this could be my favorite, detaching from ego. How do you do it? Do it off the charts. Practice this in real life, right? And I always say practice being humble in real life, because when you're humble out there, it's easy to detach. Learn to detach from materialism, from anything. But most importantly, find a method to detach from ego. If you take a live trade, for example, right now, and you lose 1%, it's fine. Just log it, walk away. That's tuition, right? That is your payment for learning. What I don't do is double up in anger. Of course, at the start, you will want to, revenge trade. You want to get back your money. But the earlier you learn that, the markets are not going anywhere. Next week they'll be there. So the true enemy is not the loss. It's the way you react to the loss. I keep saying trading could be one of the craziest, or if not the toughest careers that you'll ever embark on. It's so tough because there's a lot of personal introspection needed, and many people fear to check themselves out. All right, we are heading to 20 minutes now. The stream is straight alpha. I'm trying to get as much alpha as I can for you guys there. We will have some trades. We're looking at the Euro USD today, and so far nothing really significant is moving. Let's see. Oh, by the way, feel free to check out my YouTube page. I have so many videos on strategies and what kind of strategies I use and how best to incorporate them in your trading. So if we look at the Australian dollar, the market is really slow today. Markets are slow, but Don't forget to use this promo code, guys. It will give you 100% on your first deposit. It's also crucial to know which brokerage companies are in the good books. Now, I want to hear from you, all right? If you're listening to this live or in the comments later, drop your worst stuck in a trade story in the chat. When have you gotten stuck and for how long? You know, we're not going to laugh at you, but we want to learn. If you're out there and, you know, if you share openly, everyone gets stronger. There's no remorse. There's nothing shameful in sharing your stories, all right? So if you're out there and you're listening live, you might want to jot a little comment. And I have another reveal here. When you are looking at currency pairs, we have correlations that keep going on. Understand the time zones. Time zones is very important. In my community, I have a well display of these time zones. Know what sessions you're playing around with. Australian dollar, for example, the Aussie USD. You cannot trade that randomly, right? You have to understand what's going on in Australia and what time is it, say, in New York. Right. And when you have that, you'll be able to understand the trend. The trend on Monday, the trend throughout the week up until Friday, on a micro scale and of course on a macro scale. Understanding all these pieces and joining them up will lead to success. The harder you sharpen yourselves, the harder you sharpen your mind, the better your success rate will improve. And of course the probability. You can even have a 40% probability win rate and still get profitable at the end of the month, because we want to see a positive return, ROI, from this. All right. Now, in general, I want to say, you see, trading is very simple. It's actually really simple. We only have buy and sell. Buy and sell. Just two buttons. You either buy or you sell. It's very simple, but it's not easy. The charts look simple. This is a simple part, okay? It's what us retail traders see. If you're an institutional trader, you'll see something different. You'll see numbers, you'll see highs, lows, premium prices. So it doesn't matter how you say it. If you have a nice strategy that's putting in some good returns, the execution, the patience, the mindset that you build, that is a real battlefield. So don't let yourself get stuck in trades. Don't let yourself get stuck in trades. If you're entering a trade, you have a zone here. Sometimes it goes out, sometimes there's a breakout. Okay? And you can identify these spots here. Don't get stuck out there. Once you see the pullback, get out. Get out and keep it going, keep it going, keep it going. Have your limit orders properly well defined. This should be all in context of the bigger macro scale, okay? I'm not just saying place limit orders. Understand where you are in the market. Don't ignore those hidden small costs like spreads and slippages. Because through those insights, you'll be able to understand what brokerage is actually genuine. And above all, don't let your ego chain you to losses. Losses are inevitable, okay? You will lose. It's just the lessons that are optional. You either choose to learn or, you know, keep going after the same insanity. Now, I'm going to try to do this quite often. Every Friday, we're going to go through some alpha. I'll be dissecting what really happens at the back end. So I know many of you have been asking me to share with you some of my experiences. I'll be breaking down the risk management protocol that I follow. and how best not to get stuck. How best not to get stuck in some of these trades. All right. I want to end with that. Today, we do not have any serious trades at the moment, but just join my community. I will dissect some trades that I'm seeing. It's a Friday. You don't want to rush it. So if you don't want to go deeper, just join my free group, guys. The link is in the description. I'll break down all the setups daily. It's very serious, guys. It's, a place where traders keep each other accountable. We like to take accountability. We don't like to blame the market for anything. This is something that will actually enhance your daily life. Taking accountability for everything that goes on in your life is one other step to a good psychology. And don't forget to meditate. Gold has been a little weepy today. It's been a slow day, to be honest, though we've had very good profitable trades in the morning. Now let's see. Now those of you who are in crypto, we do have a nice dashboard here on Pocket Options. We have a very cool tool here, feature called social trading. I usually advise people that are so busy. If you don't know what this is, look it up. Social trading, you'll be able to see the percentage returns from some of the pros in the ecosystem, and you can literally copy them. By pressing that, you'll see the statistics, the social statistics, how many people are following. So for example, Trader ID, Michael S has a beginner profile level. He has over 486 followers. You can see his achievements. And you want to build this. You want to build this reputation. If you're a serious trader, you can actually earn off this. He has bronze awards, silver awards, gold awards, and so forth. So this is a really cool feature that I like to use. We have express trades. These are also very cool ways of trading. Very quick ones. We have 1 minute time frames. You could just join in and test it with a low percentage. And of course, tournaments if you're up for some kind of competitions. Cool features. We have hotkeys here. You don't have to scroll all the time. You could just set your hotkeys here, like buy. You could just press Shift and W. So I like this kind of platform. It makes life so easy for me. It makes life very easy. And another cool feature that I like is the financial side. You see, when you're trading fundamentals, you could actually keep some money. You could segregate a portion of money to trade that particular session. And that really helps with greed and your risk tolerance. If you set $1,000, you just use $1,000 and a lot more. So guys, I'll see you next Friday. Same time, same energy. Just stay disciplined, stay patient. And remember, you don't just trade charts. You trade yourself. With that, have a great weekend, guys, and catch you in my community.